Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Running terribly late here this morning, so gonna try and do this very quickly here. Recap, kind of as you're seeing on the screen right now. Actually, we are refreshing our database and moving to a different data source provider. So, if anything, it's kind of, I like to start on this page because then it just shows you how our developer cycle is going. And once this is fully populated and rocking and rolling, then you'll know that TRI is firing on all cylinders. So, we are under construction, we'll say. Sjord's kicking butt on that, but not really a concern of yours. But I usually like to start the daily brief on this page, and I just wanted to explain why you're seeing what you're seeing. Anyway, put together a nice little chart deck for you. We'll make this short and sweet and to the point and let you get on with your day. So I've been watching US dollar index very closely. Of course, we had that weekly, whoops, I didn't mean to move over there. On the US dollar index, that weekly fractal top, we came down. We're asking whether we might harami here. Is the market feeling a little bit risk off-ish and want to turtle again? Notice that harami bar is having extreme difficulties right now. We're right down against the bottom end of the range. And my hunch, for whatever it's worth, it's just Brian's opinion. But my hunch is we're probably going to lose these lows into early next week because the econs coming out are relatively agreeable. More earnings. Some semiconductors came out overnight. Really respectable earnings. 5G is taking hold. All that kind of stuff. The Fed did lower rates. They said, look, enough is enough. Now, we had an employment report come out today that was actually pretty healthy. It was pretty robust. So I'm seeing a lot of sort of news headlines about the Fed did the right thing, and the Fed was right after all. The economy's still pretty strong. Let's not, jump, throw the baby out with the bathwater thing. And really, this is all about the sort of Damocles and China and Mr. Trump and this whole trade talk stuff. So, in a weird sort of way, if we can get some sort of calming out of the executive in the United States, was the message recently that the Americans and the Chinese are relatively close to a deal. Sort of initial deals, phase one deal kind of stuff. Really the proof of the pudding's in the eating. My hunch is if that kind of talk, if that sentiment gains traction, then we're probably going to see risk come back into the market. The Brexit issue has been put off now for a little while. Did notice that things like the British pound were starting to top out a little bit here. Maybe we're bull flagging our way higher here on the British pound, but euro is kind of looking a little bit heavy here. I don't know whether we are flagging our way higher here, but clearly the resolution of either the euro bull flagging and the British pound bull flagging higher will probably knock the US dollar index down. If the British pound and the euro M out here, then I think that probably spells trouble for the European currencies, and probably the US dollar ticks back up. They did leave this pretty noticeable wick right up against this trend line, unfinished business, all that kind of conversation. So I don't think the debate is over with yet, but our tell will be, do we tick through these lows in the coming week? Also, too, like continuing that sort of theme, risk on, risk off. Ironically enough, the idea that we were going to have a trough, I had been thinking, according to my cycle sort of analysis, thinking that where the hell's damn chart, that trough should come in around the end of the month, but the market just said, man, nice try, Brian. The trough actually came in at the beginning of the month. Interestingly enough, now, maybe the cycle's disconnected here a little bit, but I should be actually expecting an up market right into sort of the second week of December. And historically, from my experience in the market now, with all this Trump stuff and trade China stuff, I mean, I suppose the market can be thrown a wrench at any point in time. But from my experience, the market actually likes to, once we get out of October, buy when it snows, sell when it goes, that kind of stuff. The market actually, I have found historically, actually likes to rally from sort of, somewhere in November right into the beginning of December. And a good historical reference, I made reference to it in the daily brief today, is if you want some historical precedent of what often happens around the beginning of December, Google these two words: irrational exuberance. So if you look into those two words, you'll understand what seasonally normally happens into the first week of December. Now, keep in mind, last year, where the hell's last year? Last year, there was a complete disconnect, right? And the market just absolutely collapsed into Christmas. I mean, I've never seen that before in my career. I suppose it's sort of a sign of the times and, political leadership and all that kind of stuff. Anything can happen here. But on balance, ironically enough, I actually like the idea of risk coming back into the market, risk on, buy when it snows, sell when it goes, all that kind of talk. So, I don't think it should surprise us. Risk on's, looking uppy. We talked yesterday about options open interest and options expiry. To be honest with you, I'd be surprised if they can close the SPY above 204 today, or 304, beg your pardon. Sitting at 305.70 right now. So there could be a whole shitload of calls that expire in the money here, which would be a bit of a surprise to me. But at the same time, too, given econs, all that kind of stuff, I suppose, I can understand that the tone of the econs coming out today was relatively bullish. But there were some things, like manufacturing numbers in the States came up pretty poor. One thing that sort of caught my attention with looking at risk on here is notice on the weekly basis, Willie is technically stupidly overbought. And on the daily basis, Willie is technically overbought and extremely overbought, giving a reading of minus 10.78. I mean, you can't get much more overbought than that. So I do believe that we're near some sort of pivot here. But, as we sort of showed you with that NASDAQ chart, I don't know whether I still have that on here or not. But I did up a NASDAQ summary recently, and here it is. I mean, here are the levels. I heard that Jeff Bezos is the richest man in the world now and all those kind of things. I mean, do we have to work our way up into these 1618 kind of ideas, levels before the end of this bull run? It makes sense. But, again, here, Willie is giving us a reading of minus 11.59. That, to me, is extremely overbought. So I can't really chase this kind of type of market up top here. I'm just not allowed to. But as we can see, there are no M's here yet in price. So out of things like the tech stocks, we're still pretty uppy. And like I said, some of the semiconductors had pretty big gains here today. There was one semiconductor that I showed in the daily brief that took off like a rocket, but I don't have it in front of me, and we don't have enough time here. I got to get off to class here. I have to teach class in 20 minutes. Ugh. So risk on is catching a bid today, and then seasonality. I do actually like the idea of an up market, but at the same time, too, getting extremely overbought in things like stocks. Risk off, we had, the dead cat bounce, counter trend rallies. We're actually starting to see some failures out of the bonds, which would make sense because bonds and stocks a lot of time move in opposites. And if the economy is really strong, then that should mean interest rates should be going up on the long end. We're wary of inflationary pressures, all that kind of talk. And the gold is just sort of sitting here. Um, so as a result, when we look at our sort of risk on, risk off kind of conversation here, there's the oil moving up today. There's the stocks pressing higher. Bitcoin's trying. Bitcoin's in a little bit of a dangerous place here now because it did have this sort of window to rally. It was given the green light to rally, and it just couldn't find any buyers. So this looks a little dangerous in here, but we'll talk about that in a bit. And then here's the gold, the bonds, the yen, all down on the day. And like I said before, we kind of thought that there should be some sort of counter trend rally, relieve that insane oversold condition. Cute little W's coming in on a clothesline basis on things like the yen down at the bottom and the megaphones. That was this conversation yesterday. Bonds have actually started to come down, fill in gaps. Things got a little crazy there. There's a gap all the way back down at the original low there. And then here's our gold just sort of sitting here above both of these uptrend lines and also above this downtrend line. So, hanging in like a champ. Interesting how we got back into Julian's shorting level up there between 510, 520, 5 area, and it still found some sellers. So there's clearly selling interest right up against these highs here. And of course, like you saw that US dollar index, if it decides to actually turn and maybe we hold these lows and start to work our way back up, wicks and tails it could be eaten. And I could easily see things like gold actually have to come off here a little bit, just because gold's priced in US dollars here. So gold can actually just stay put, and if the US dollar has a bit of a rally, then gold has to come off. And interesting too, the gold and silver stocks. I like to watch Barrick very closely. Just sort of floundering around in this range here. I'd like to see a nice solid W come in here, especially off that trend line. That would make me feel a lot better. And the gold stocks themselves, straight line up, gold and silver stocks. Straight line up, a little bit of a doji here today. Lots of gaps to be filled on the downside. So if we do have that sort of pullback that I'm anticipating on the gold and the bonds and the yen here, could we backfill some of these gaps? I think so. We could really draw this downtrend line just as we had a tag of it from the other side here. We could very easily do the same thing again here, fill in these gaps from the other side of this trend line. And there's one gold stock I'm interested in. I've sort of said that I'm a cheap ass, so I want to be buying against the bottom end of ranges. So that's not what I wanted. Actually, that's not a bad looking little name there, whatever it is I pulled up there. Alstrom. I'll take a look at that later. You can see here the Alio is trying to put in a bottom here. What I really like now is, of course, bottom end of trading ranges. If we draw things like reload zones, and I'm getting way off topic here, but I like the idea of fishing at or below reload zones. Then we go down, we look at our momentum indicators, and we see lots of signs of divergence. So I'm getting the impression if I can get some sort of calming down here, nice W's come in, I'm gonna start seriously thinking about buying some gold stock. Just, everybody should be aware of that. Moving on in our conversation, a couple of interesting names that I actually did place some orders on. I was talking to you guys recently about this Love Sack, which is kind of a funny name. And I just, in a weird sort of way for my retirement account, I like to throw in symbols that when I look at them, I feel good. It's terrible, I know. But fundamentally, not a bad story. This stock did go in and put in a cute little W here through a reload zone, left a gap. It was racing up here, and I was like, stop going up, I want to buy this level. So the market actually came down into this level, and I actually bought some. For whatever it's worth, I got filled on the gap level here. So I have no idea what's going to happen here. Live by the sword, die by the sword. If we break these lows, I'll walk away. And if anything, this is such a great analogy of it's a trader's life. You are paid to worry. So I've stepped in here in the breach at a level, and I don't know what's going to happen. Nobody does. And if you ask the public and they looked at this, they would say, oh, you're going to lose money. You're going to get screwed. But, live by the sword, die by the sword. I did a recent trade in a altcoin. Basically exactly the same logic. There's the W's. There's the reload zones. Work my bids, and you can see what's happening here. You don't know what's going to happen down here. You just don't know. So anyway, this is a bit more advanced trading. Anybody who's trading levels blindly and they understand that there's not as much anecdotal evidence here to relieve your anxiety that yes, this thing is going up. If anything, right now we're kind of the old adage, catching a falling knife. If the knife goes through the floor at 1507, I have to walk away. I don't have any choice. But levels are levels are levels. So just an FYI. And then we had a TRI SOF club. I get the same logic here. Hopefully you can see the W, you can see reload zones, and GWIDs. Brian's in there, and didn't get a fill on this one yet. I got the order in first thing this morning, and the silly thing jumped up. So we'll see how it goes. But long and short of it, did some business off of this gap and working orders off of this level. So, just goes to show, Brian is in there thinking about getting long. And there are ideas out there. Now, I'm not telling you to buy this. This is what I'm doing with my money. I might lose on these trades. This isn't, I recommend that you buy this because you're going to make money. This is just simply, I'm the full disclosure kind of guy. I don't have a problem telling you what I'm going to buy. And really, I don't have a problem telling you, if I get stopped out here saying, yep, Brian's a loser, he lost money, sorry. That's just the way it goes. But at the same time, too, I know the efficacy of my setups, and I'm very comfortable taking my shots here. Heading on over to crypto, kind of like what I showed you there a moment ago. I mean, there are some really interesting names in this space. Lots of reload zones coming in and affording the opportunity to get some fills. I'm actually really interested in Alex Sturck's UBIC here. It's sitting down at an interesting level. So that's a new name I haven't talked to you guys about recently, but I think it's definitely interesting. Just simply put, overview of things like the corn. Been talking to you guys recently about basically the market is trapped in this trading range. And if we can W out here and break out through the top, then I think we got a chance for a half-decent rally here. But it's not in yet, so we just got to wait for it, patient. I'm a little disappointed that we just haven't seen buyers turn up here. If we start going into orgy mode on risk assets, we might find that Bitcoin just gets pulled higher with the rest of the risk-on assets. And then, of course, too, we got the weekend coming up here. You can almost feel Bitcoin being pulled up here. Get your fucking ass going here. As the other risk assets are all flying here. For the time being, this is the weekend, so things may change in a heartbeat. Lower time frames, interesting little W's that are trying to come in. You can see the W's in the indicators. So there are these little lower time frame setups. This is 50% trading range of that range on the other side of trendline break. So that's there. And then, like I said, if this thing really gets going in earnest, then I think we can actually start talking about some serious aggressive upside targets. It hasn't broken down, but at the same time, too, it hasn't broken out. It's just a big hurry up, and we got to wait for the market to do its thing. We'll finish off today. Just a quick talk, review the BNB, because I think to all intents and purposes for a guy like me, I still think that BNB is a good proxy for this space, and especially the altcoin space and sort of the frivolity of China and all that craziness. So, we did have topping out action on divergences and stuff, painted 2-to-1s at 50% tags, yada, yada, yada. Same sort of thing as Bitcoin here. We've been stuck in a trading range for probably the past, couple days. If we can accept back above this trend channel that goes all the way back to the original bottom, then I think we can rock and roll. And you could even start drawing bots and stuff to take us higher. And one thing I do like about this now is you can see the internals are trying to clean up. So let these internals just tell you whether, the bull is actually waking up and taking control, or we get things like W's coming in on RSI studies. You can see right now the bear is very much in control. And we have to start seeing W's and then W's within W's to actually start seeing the bull take over here. So, kind of thinking, range with the potential of breaks to the upside. Those potentials are still on the table. And now that we're into November, we're finally out of October, I think risk on can actually catch a bid here. But we'll see what happens. All right, everybody. Talked way too much. I got to go teach a class in 10 minutes. Good luck, Brian. Have yourselves a great day. Hope you got some value out of that presentation. Hopefully we'll see everybody on the broiler chickens on Sunday. And we're going to be talking about Bitcoin Boom! All right, guys. Have yourselves a great day. All the best. Bye for now.